Hi, this is Drew Tignanelli, and this is a Financial Consulate update for December 2011, probably the last one for the year. So,
Plenty going on.
Yeah, there is a lot going on. We've got a paradox going on.
Can we get away from Europe?
We can't get away from Europe, but because that's part of the paradox. The paradox is that you've got these extremely low interest rates,
Right.
and a lot of liquidity being pumped into the system.
Sure.
And a lot of corporations have a good balance sheet now. They're very flush with cash. They've lessened their employees. They've lowered their cost of borrowed money.
Sure.
They have a ton of cash. They're just
Strong position.
And you would expect in this environment for the market to be going higher and significantly higher.
Right.
The problem then becomes that you have this European economic mess that is not going away.
Yes.
They keep coming up with a pseudo solution that lasts for 2 weeks or 2 months or 6 months, and then all of a sudden it comes back to haunt them again.
Yeah.
And if that were to fall apart, it would really wreak havoc throughout the world.
So if they do fall apart, you don't think there's a way for us to get out of it unscathed?
No one will come out of that unscathed. No, it's just, yeah, you can argue that Europe isn't that big a part of our economy, but they're big enough. I mean, we're about as closely interrelated to any economic zone in the world as Europe.
Right.
And but on the other side of the coin, you're seeing some good things come out of Asia in the sense that lower interest rates, starting to loosen up on money supply also, trying to encourage economic growth. But the problem is it'll take a while for that to happen. In addition, Asia does a fair amount of business with Europe.
Yeah,
and if they start to go into a recession, which it looks like they will, Asia is not going to come bouncing back anytime soon.
And Drew, some people are talking about a bust scenario in Asia. Do you think there's an opportunity for that on the horizon?
Well, you're always going to have a little bit of a zig and a zag in Asia, as they say.
Emerging economy.
An emerging economy. I mean, look at the United States history.
Sure.
When they emerged from a reasonable economic power to the world economic power.
Right.
We had the Great Depression, we had World War II, we had the 60s, you had all kinds of issues in the 60s, and you had the inflation
All
of
kinds of issues.
Well, there was a lot of very significant issues.
Vietnam towards the end.
Yeah, nuclear missile crises,
Right.
there was a lot of serious issues in the 60s.
Woodstock.
Then you had inflation in the 70s.
Right.
You had the crash of '87. You had the Middle East turmoil in the '90s, and then again in the 2000s when they took the World Trade Centers down. So I mean, you're going to have zigs and zags in an Asian economy, but it's not bust in the sense that it's over.
Sure.
It's got a long way to go.
So what has the European Central Bank done recently? This week we just had some news that they're trying to create yet another fix.
But they lowered their interest rates 0.25%, but that's like a drop in the bucket, as they say. It's not even worth talking about.
Mm-hmm.
They refused to buy countries' bonds, and I think that's a good thing. But yet it's a thing that's going to create more confusion. And I think what you're going to see is you're going to see the United States market try to go up. But it goes up and then it's going to come back down again. I don't think you're going to have any major downturn in the U.S. at this point in time, but it's not a market that you should try to fool around with. You should be extremely cautious with these markets, and that's what we're trying to be. But with interest rates at zero, you just can't sit around in too cautious a position. You have to take some chances to try to get any kind of yield in today's world.
Sure. So we're keeping capital preservation as the number one focus, and then attempting to get some yield in both interest-bearing as well as some equity vehicles in order to create some form of a return.
Yeah, I mean that's basically all you can do right now. The opportunities we see are commodities and currencies, and some type of the safest of bonds that can get us a yield of a few percent right now. And trying to, when you see these markets swing down, try to swing in, try to pick up some of that profit and swing out again. Mm-hmm. And it just depends on the client risk tolerance as to whether they're going to see us do that or not. But it's a most manipulated market I've ever seen in my career. It's not one to take lightly.
Well, Merry Christmas to you too.
I don't mean that to be a bad thing. I just mean it to be what it is.
It is what it is.
It is what it is, and we just have to be cautious through it. But the opportunities that are coming are going to be phenomenal. Let's put it that way.
Looking forward to that time.
Yeah, really. And this is Drew Tignanelli saying God bless.